As there's more wage pressure, as wages are going up, is that going to cause inflation to be stubborn, to stick around longer than anyone would expect? Is there a wage price spiral, upward spiral being created? I'll share some perspective on that coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notification, and smash that thumbs up button. All right, so I'm in the car listening to the radio. If you listen to the radio, you can't get through a set of commercials these days without hearing a business not advertise their product, but advertise for a job, advertise job openings. Typically it's multiple. If you're getting into those commercials, you're going to hear someone promoting their business. Well, that's normal, okay, because we've got the labor shortage and all that sort of stuff. That's normal. However, here's what's not normal. I'm driving in my car the other day and listening, and commercial comes on, and it's for a bakery and a couple towns away. And the bakery was advertising hourly wages at $24.95 an hour. $24.95 an hour at a bakery. Guys, I live in northern Indiana. This is not New York City. That is unbelievable. I would have never expected. I'd expected maybe, $15 an hour, something like that. Almost $25 an hour at a bakery. Here's my question. Here's the point. How much are they charging for that bread? How much are they charging for a cupcake? I mean, that is incredible. Think about this, okay, just for a second. For that bakery, I'm sure rents have gone up. Right, rent has gone up. Even if they own the building, right, the company or the entity that owns the buildings, they're going to be, rents have gone up. They're going to charge more for rent, okay? Their inputs, the dough, the materials, all that stuff, that has gone up as well. The machinery or any of the equipment that they need, that cost has gone up. Certainly, the utilities have gone up as well. The entire operation is more expensive, and then wages have gone up to that level. I would have expected maybe $18 an hour, something like that, $15, $18 an hour to $25 an hour. How much are they going to charge for a loaf of bread? How much can that bakery charge for their pastries, whatever, in order to cover the growing costs and cover the cost of those wages going up? Guys, this is precisely the pickle that we find ourselves in because of inflation. The more inflation we have, we've seen prices go up, of course, right? And so for a business, they've been able to raise their prices for their products, and they're doing that to cover the cost, the input costs that they have, because their costs of operating have gone up. But we're also starting to see wages starting to go up at a very fast pace. We had wages go up at 4% last year, which I've been saying is still lagging a bit. I would expect that would be going up even more. But that's the highest wage increase in a couple of decades. So that's going up. Is with wages sort of lagging and going up, because obviously everything's getting more expensive, is that going to cause inflation to be stickier, to be a little more stubborn? That's what we've been talking about here, and if you follow the Wise Money Show, you've been listening to us on a faithful basis, we've been talking about that. That's a concern, that wage pressure will force companies to continue to raise prices higher than longer and cause inflation to stick around longer than anyone would expect. So a couple more things to think about here. I mean, number one, we had the highest level of CPI in 40 years, so call it 7% for last year. The personal consumption expenditure, the PCE, which is what the Fed says they like, we've tracked it for a while. That also was at a 4-decade high as well, came in much higher than expected, all right? And then, like I said, wage levels or the wage cost index for businesses increased 4%. My guess, my belief, wages are lagging in this, okay? We're still digesting, we're still adjusting to these higher prices and inflation being there. My guess is wages are lagging, and there will be continued pressure to keep wages, for wages to go up. Why else do I think that? We are still struggling with far too many job openings than there are people looking for jobs. And so in that sort of heated and competitive wage environment, labor labor environment, you're going to see wage pressures go up. But here's the problem. If you look at an average business, their salaries, their compensation for employees is around 30% of their total revenue, okay? For a service business like ours or many others, lots of service industries here and businesses in the United States, that can be upwards of 50% or even more. So if I were to ask you, okay, for a business, the largest expense item that they have is going to see continued pressure and costs rising, is that going to cause them to continue to raise prices for their product? Yes, that's what we're talking about. This wage price upward spiral that could cause inflation to stick around and stay stubborn, be stickier than what maybe lumber would be, right? Or gas, right? Brent crude has gone up quite a bit, but there's lots of speculation that, oh, those could go up and then they'll come back down. Wages can't really do that. Check out this article here from Morningstar talking about this very issue. I've been thinking it, I've been seeing it, I've been talking about it occasionally here on the YouTube channel, but I mean, it just talks about how there's just this very, very tricky spot that the Fed is in. The Fed has printed all of this money, they've caused inflation, and now they need to try to figure out how to solve it. But what can the Fed really do to help manage inflation when it's being driven, when it could be driven longer by wage pressures? Okay, let's just go through what their options are. Can the Fed raise interest rates enough that it will cause employees, workers to think, well, I don't need to have as much upward wage pressure? No. Interest rates will not help that at all, in my opinion. What if the Federal Reserve starts reducing their balance sheet, doing that quantitative tightening, if you will? That's not going to influence things either. Employees, individuals are feeling the effect of costs being higher, and they're lagging, saying, listen, it costs more for me to live my life, therefore I should get paid more. And as they get paid more, it's going to cause businesses to raise prices for their goods. You've got this upward price cost spiral going on. So what is the surefire way to solve this or break this? A recession. Some way of adjusting the imbalance that we're seeing in this competitive labor market. Some sort of, instead of having this very competitive wage bidding against each other, a recession, which obviously I'm not rooting for or hoping for. I just don't see a way that the Fed can fix, or the Fed policy can do something that would manage this upward pressure, this wage growth spiral, okay? So to me, I think we're gonna have this pressure until we see the next recession. Hopefully that's several years away. We'll see. I think we'll have this pressure, and I think that will mean inflation will stay stubbornly high. Do I think it will remain at 7%, grow another 7% on top of this? I think that's unlikely. Lots of people are calling for inflation to start calming and start coming down. I think so as well, but I think it will remain at higher levels, elevated levels above the 2% or what we saw for the past few decades, simply because of this wage price pressure, okay, that pressure. So how does this impact you? Well, for you, you're having to deal with higher prices as you're living your daily lives, and you may or may not have seen some upward pressure on your salary. To me, this calls for trying to inflation-proof your life and manage your personal finance as well. Just did a video about that. Be sure to check that out. Work with your CFP as you're managing this challenging time between costs going up and trying to juggle your financial priorities and costs and achieving financial goals. So work with your CFP on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with K. WiseMoneyShow.com. You can find us there as well, or send us an email, info@Korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.